Hi everyone, and welcome to this morning's Forex session. Oh, thank you. I just realised we're a couple of minutes later than we anticipated. So, as always, thank you for your patience. Before we start, as usual, you should be able to see the disclaimer that's on my screen, and I'm looking over and I can see it on David's screen. He's giving me the thumbs up. As you know, trading can be a very risky business, so please don't ever think of trading with money that you cannot afford to lose. Right, let me just take that down so we can actually start. Excuse me, if this is the first time that you've joined us, you're very welcome, obviously. I will be running this session along with my husband David. He's sitting next to me. We'll be looking at the MT5 platform, which is the one that I tend to predominantly use, and David will have the NinjaTrader platform up, and we'll be swapping backwards and forwards and seeing basically what's going on in the Forex markets this morning. What are the trades that have been setting up certainly since the start of the European session, and of course we've got London opening in about 40 minutes or so. From a fundamental perspective, really, it's really all about tomorrow, which is, as you can see on the calendar, it's the FOMC tomorrow. We've got the interest rates and the statement, and we've also got the press conference. The market seems to think that the well, certainly the Fed's fund, the Fed watch tool, which is over at the CME, there's sort of 92% consensus that there will be an interest rate hike tomorrow, and the consensus is that that's all kind of already factored into the price of the US dollar. And if you've been following the dollar index, you know it had a bit of a comeback yesterday in the US session. So what traders will be really listening out for is what Powell is going to say at the press conference. I don't believe there's a conference every time there is an FOMC. I don't think there was last time, but this time there is. So it's they're going to be listening to that quite keenly. And this is just one of the factors, the many factors that we have to be aware of as Forex traders. We have to decide, we have to try and anticipate what are going to be the drivers of a particular currency. And obviously fundamental news is just one, and of course there's politics and there's Trump, and we could go on and on and on about you know, what is it that's going to be driving that a currency and a currency pair in the time frame that we are looking to take a trade. And in fact, drivers and how we can identify in a currency pair what is actually moving that currency pair, because obviously you're looking at two currencies set against each other. So for example, I'm looking at the euro dollar at the moment on my chart. Well, you know, is the movement in that, is it being driven by the euro, or is it actually being driven by the US dollar? And those of you who are here in the room, I can see we've got some of our quantum users, and you know, it's lovely to have you join us. You will know that we have developed some very specific tools to help us gauge whether, for example, in the euro dollar, is the force that is driving that pair, is it much more weighted to the euro, or is it much more weighted to the dollar? Because having that kind of information will also give you a heads up as to whether any trade you're going to take, is it, for example, if you're thinking, right, I'm going to buy the euro, but is the euro being universally bought in what we call its complex? In other words, we just don't look at the euro dollar as a pair in isolation. We look at the euro and its performance perhaps in some of its other critical pairs. But it's easier to see on the charts and on the indicators than it is to explain. So while I move my my workspace across from my MT5 platform, I'll just pass over to David.
Thanks, darling, and a very warm welcome to you all, wherever you are in the world. It's an absolutely glorious morning here in London, and has been ever since we got up around 6 o'clock. So it's an absolutely fabulous day, and I hope it is where you are, whether it's the morning, the evening, or potentially the middle of the night. You're very welcome to join us. Just to pick up on what Anna was saying about the fundamentals, and we've also got the RBNZ coming up tomorrow. I think it's tomorrow evening. And for those of you, I know we've got 1 or 2 of you who are on the education program anyway, but if you read one of the PDFs we wrote there, which was actually a year in the life of the FOMC, which sounds terribly dull reading, but actually what we tried to do was highlight the tone and sentiment that comes through in statements and in releases and how they communicate with the market. And it's incredible that one word or a group of words or a nuance, how that is then picked up by the market. It occurs for all central banks, irrespective, and it's just picking up that tone, that single word or that single statement, or that change in emphasis, which is what the markets react to. The headline rate is often not that important. It's the phraseology and the terms and the nuances that are wrapped around it which are far more important, which is why the press conferences afterwards and any statements that come out, those are the important things to watch. And indeed, one of the great things to do is if you watch it live, if you watch a press conference live and you watch the reaction of the particular currency pair, say on a 1-minute chart, you'll see it instantly, this constant reaction to a word or a phrase of words. It really is quite revealing to watch that, and it just gives you a feeling and a sense of how important those phrases and terms are. I'm going to pass back to Anna. She's just set up there. We are focused on the euro dollar at the moment. It's been moving up relatively strongly since, as I say, since about 6 o'clock. We've had some volatility come in. I've got the NinjaTrader running, so we can flip over to that at some point. If you do have any questions, please just drop them in the chat box. Happy to answer them there. If they're longer questions, we'll answer them on air for you.
And unlike last week, where we really were spoiled for choice for what was whizzing about, this morning's a little bit more sedate, if you like, in the market. And in some ways, certainly if you're a new trader, it's probably not such a bad thing, because when you get a lot of volatility and markets seem to move very fast and they seem to be out of control, and the overriding emotion that seems to that can grip you is the fact is, oh my goodness, all this is going on and why am I missing out, and you're desperately sort of looking and say, oh my god, let me find something to trade. Which also brings me to another question that we often get asked, and saying, unlike stock trading where you have thousands of stocks to choose from, and commodities you have a reasonable number with in Forex, and I know there are hundreds of pairs, you only have to look at the list that maybe your broker offers, but in reality we're talking 28 for, derived from the principal currencies, but even 28 can be really sometimes can be overwhelming, because you can get some strong moves in 3, 4, 5, and you think, oh my goodness, where should I be looking to trade? Which is why we always suggest that when you first start, is you first of all restrict yourself to maybe a handful, and the handful that you restrict yourself to should pretty much be the ones you should focus on, would be the ones that tend to move in the period, in the market. What am I trying to say, David, here? In the session, that's what I'm trying to say, I apologize, in the session that you are following. So for example, here we are in Europe, Asia still is just winding down. We've got Europe opening, and we've now waiting for London. So what are the currencies that are likely, to attract the most attention? Clearly it's going to be the euro, clearly it's going to be the British pound, funnily enough, sometimes the Aussie as well. But you have to, you have to sort of establish that. There are, on investing.com, there's a fantastic tool. It's called a volatility tool, and then it will tell you which of the currencies that move in the different sessions the most, which pairs then move, and also on particular days as well. It's a kind of, you have to kind of do a bit of research. The way, if you were looking to invest in a stock, for example, you would look into the background of that stock. You would say, you know, well, you'd find out when the earnings were in the US, you know, what is likely to drive that, what sector is that in. You really do have to carry out a little bit of research as well with the currencies and currency pairs. And although this is a 24-hour market, in reality, in 24 hours, it's three separate sessions. They all have their distinct characteristics. Pairs will move, different pairs will move at different rates. Some pairs will do nothing overnight, for us overnight in Asia, and other pairs will be more active. Clearly, the yen, anything with the yen is going to be moving in Asia, but the yen pairs will, some yen pairs will also move in London and New York because they are a proxy for sentiment. So that's a little bit of background to that if you've never come across that before. And as David mentioned earlier, in our Forex program, we do cover this in a great deal of depth. Not only do we do the technical analysis module, which is primarily based on volume price analysis, but we do cover the drivers, the fundamentals, and also the related markets. What is actually, sometimes a currency and a currency pair will move because what is happening in a related market. Oil is a classic one. And we also look at psychology and the mechanics of trading. It really is, we've put something together of everything that we believe you need to help you succeed in this very tricky market. Forex is very deceptive. It seems very straightforward and very simple. Superficially, all you're being asked to try and decide is something going up, or is it going down, or perhaps is it going nowhere? But while I've been talking, we've been watching the euro dollar, because as David said, we've had some nice moves in it. Our starting point, as always, is over here on the CSI, the currency strength indicator, which breaks these currency pairs down into the individual components. You can see each one of these lines represents an individual currency. Now, my workspace, this is purely my own workspace for the pairs, and this is, if you like, what I call a very typical day trading. So if you're a short-term trader, and by that I mean you're not going to be looking to stay in a trade very long. Very roughly, the time frames break down in this way, and this is, again, there is no hard and fast rule about this, and different people will have different opinions. But if you're going to be looking to day trade, in as much that you're not going to be holding overnight, you're just going to be sitting at your screen and perhaps, you know, looking for some nice moves, and that is, you look up maybe to the hour, which is why I've got up here, I've got the hour, I've got the 30-minute, and I've actually got the 3-minute, and I've got a non-time based chart, which is my Renko, which will help me with my entries and exits. If you're going to be what some people call maybe a swing trader, you'd be looking for maybe an hour up to the 4. Well, certainly on MT5, you've got more a choice of time frames. You can do the 6-hour, and you've even got up to the 8-hour, which is a whole session in Forex. But you know, you really wouldn't be looking at the 3-minute chart, the 5-minute chart. You'd be looking at these sort of medium-term timeframes, and the longer term, obviously, you'd be looking at daily, weekly, and monthly. Now, even if you're a swing trader and you're looking at the 1 hour and the 240 and maybe the 6-hour, you would still look, perhaps move down to the hour or even the 30-minute, perhaps to see a potential entry, just to, you know, look at your support and resistance, just because that's where the moves are going to start. But your main focus is going to be in these, if you like, these middle time frames. For these sessions, we tend to focus on the faster time frames, not because we advocate them, it's because things are going to move, basically. So, you know, if we're going to try and capture a move, this is where we're likely to see it in the limited time that we have for this webinar. So that's the individual currencies. Now, as well as the these are the time frame charts that I use in the CSI. If you are a euro dollar trader, then you really do have to have a dollar, you know, you have to have access to the dollar index. Now, in the quantum tools, we have developed this indicator as well, both a dollar index, a yen index, and a euro index, and we're probably possibly going to add to that an index for the British pound, given what's going on with the British pound at the moment. This is something that David is discussing with the developers at the moment, because certainly the dollar index is, you know, the mirror image of what is happening in the euro dollar. Why? Because the biggest component of the dollar index is actually the euro. So when you see the price action that is developing on the euro dollar, you will see that mirrored on the dollar index. Now with XM, they actually offer the contract itself. This you can see is the December contract for the index, and it's just very, very useful to have, because I can see what the dollar is doing. I can see it's falling. This is on the 15-minute. The red line over here on the 30-minute tells me that it's falling. Now, as I said earlier, it's falling, but what is it falling against, and is it stronger in one pair as opposed to another? I said earlier, you have to decide. If you're only going to focus maybe on 3 or 4 pairs, the reason for having the CSI is you can see whether the lines that represent the pair that you're trading, are they moving? Are they diverging? Is there strong movement in that pair? And so it will also give you the heads up saying, well, actually, there's nothing happening in my pair. Maybe they're going up in the same direction, but what we're seeing at the moment is we're seeing the dollar moving down quite sharply, actually, and we've got the euro moving higher, and we've also seen a cross, and a cross on the CSI is actually quite significant, because it means that there is, you know, there may be some momentum behind that move. And certainly on the 15-minute chart of the dollar index, we've seen that there's the failure to move up about the 94 region. 94 is quite an important level for the dollar index. It sort of tried to move above 93, 92. You can see here it's tested it on 1 or 2 occasions. That also represents the R2 Camarilla level, and in fact it's been falling since then. How does that translate? That obviously translates into what is happening on the Renko, and in fact the move higher, as we can see, this was the yesterday the move low, and this is now the bounce higher in the euro dollar. And in fact this is the move that I've been tracking. Where is this move going to? Well, my first main resistance, certainly on the Renko, is at 1764. Where was my entry? My entry was probably around here when I had a consistency in the trend dots, which are bright blue, and I've got 3 or 4. I've got a transition in the trend monitor, and now I've got a bright blue on the trend monitor as well. The Renko not only gives me my entry, it will help to hold me in as well. Moving to my time chart, because I always use it with a time chart on my 3-minute, I just like to use the 3-minute chart. In fact, we've had a break from the VPOC. This is a successful breakaway from the VPOC, which is at 1745. We've got an increase in volume. We've got volume under this candle here. We've got volume building. What I don't like is actually the fall in volume under this this candle here, but we'll see if the momentum will carry it on higher. And as I said, the Renko will help to keep me in. Now, I said earlier, this is the 30-minute CSI. If I move down to the 15 on the CSI, let's have a look, see what's happening. Just wait for it to load. And I can see the dollar is still falling, and the euro is still rising. In fact, the British pound is also still rising as well. Let me just move that down to the 5, because as I said, what the faster time frames will tell me. I'm clicking the wrong one here. As I know, I just realized that. There we are. Now, what's interesting here on the faster time frames is that I'm possibly seeing an overextension of the euro. As we can see here, the line is rising quite sharply, but it's reaching a point of being overbought, and on the dollar isn't quite at the same point here, but that's still falling. Let's move down even faster onto the 3-minute. Let's see what happens. There we are, and it looks like that's what still wants to carry on higher. This is carrying on higher as well. Let's see if the volume is coming into to help it push it high. It is kind of coming in. That's what we want to see. We want to see an agreement between the price action and the volume. I actually like to use the 3-minute chart. Let's see what the 3-minute chart is. There we are. Yes, and in fact it has come in to support that move higher. Where's it going? Well, it's certainly going to aim for 1762, where it'll probably have a little pause. There we are there. That is a significant level, and to move through there, it's going to need volume. Now, while we watch that, what I said earlier, how does that compare with other euro pairs or other dollar pairs? And this is where we've developed these other indicators. First of all, we have what we call our matrix. Let's move that down to, say, 5-minute here. And I've actually isolated here the dollar, and we can see where the dollar, what are the dollar pairs doing, which are moving the most, which are either the strongest or the weakest. And we can see here we've actually picked probably the right one to look at, because we've got the euro dollar up here, and in fact the other one that's falling quite nice, just as strongly, is the dollar Swiss, because the two are correlated quite strongly. And what it also tells you is where the other pairs are doing. Well, we see the euro dollar, the pound dollar. We already knew that from the CSI, because those two lines were, were very close together against the US dollar. If we move further down, let's go down to the even faster time frames, that's the 3-minute. You can see here the position has switched. I'm looking at the dollar. What I'm looking at here is the performance of the dollar in the majors, right? And we can see here the sort of the constant shift, if you like, of dollar selling. Where is it strongest at any particular given time? And we can see here it's very much euro dollar and pound dollar, and these positions keep flip-flopping between the two. It moves from, and they move up and down the matrix, which is why we developed the matrix, because it helps you determine whether the pair that you're in is it's actually moving against its against the others in its complex, and also perhaps help you choose a pair. If you come now, you think, oh goodness, one's been moving very strongly, the chances are at some point it is going to reverse, because this is a market of mean reversion. Where it's going to reverse, that is going to depend on VPA, but it's also going to depend on the support and resistance. Where is it likely to stop? And I said earlier on the 3-minute chart, I said the R2 was where it was going to possibly pause. It's actually spiked through, and it's actually pulling back from there, and the volume is also falling as well. And that's what a lot of traders do. This is support and resistance is measured on a chart in many different ways and lots of different indicators. Fibonacci is essentially support and resistance. Our volume point of control looks at support and resistance through the prism of volume, price and time. Our support and resistance indicators that we've developed for MT5, the accumulation and distribution indicators, that's what we've developed them for. And how you use them, a lot of traders like to what's called lean into them. So especially with Fibonacci, if it reaches a certain level, they'll say, right, if it reaches that level, I'm going to sell. Sometimes it works, sometimes it doesn't, but at least it tries to give traders a sense of, it gives them a framework for the price action. Personally, and with David, we like to use them as part of our broader methodology. We just don't like to depend on a line on a chart. And finally, on the other indicator that we've developed for pairs, move that down to 5-minute, is the array. Now, the array also factors in momentum into a move, which is why it's got most uptrending or most downtrending. But by having all this quick look at these indicators, and that's how you use them. You use them, first of all, perhaps to spot something, but also while you're in something, it helps you to stay in. Right, now I'm going to pass over to David, because I know he's been looking at other things as well. I'm going to keep an eye on this. This is still moving higher. I'm still looking at 1764 here. I can also see on the CSI, this is looking very, very overextended. Now, the decision I have, if I'm not in this trade, is do I have an opportunity possibly to take a short against this quite strong bullish move that is also developing on the hour. And, you know, and again on the hour, where is this bullish move likely to go? Well, what have I got here? I've got 1770. So I'm in the same ballpark, 1764, 1770. So possibly when it gets there, possibly there may be an opportunity to short this pair. Can I move over to you, love? Problem? I'll turn myself off.
Wow, nothing left to say. Fantastic. I just want to stay with this workspace for a moment because it encapsulates really one of the key essentials of trading, which is all about multiple timeframes and understanding why something has happened in your time frame which you might not be aware of in a different time frame. And this is just a very simple example because you're spread across from an hour right the way down to the Renko. If you look at the hourly chart at the top left, we had volatility come in. When was that? Yesterday. Big volatility candle. That was Draghi. We had this huge volatility coming into the market, and you can imagine the number of traders in all different time frames jumping into this market, making money to the long side. Now, the Johnny-come-latelys would have been coming in at the top, whilst others would have been trading this maybe on a very fast time frame throughout that uplift and making money. If you're on a slightly slower time horizon, then what it's telling you is, first of all, we've got volatility. The candle has closed pretty much off the highs of that session. We've got a decent spike to the upside. So what we're anticipating, what we're expecting is at the very least a reversal into the spread of the candle. It has to be because the candle's closed off the highs anyway. So we're expecting that in any case. And worst case scenario, a complete reversal in sentiment. But at the very least, the anticipation, the expectation is that we are likely to see some consolidation as a result of that volatility. Because, as you probably know, as I'm sure you know, volatility and insider market participation go hand in hand. It is the ideal time for them to trap traders into those weak positions. And when a market is moving fast, the biggest driver of emotion is the fear of missing out, FOMO. And it's immensely powerful because if you see a market that's really moving quickly, either to the upside or tanking to the downside, your emotional response is to jump in to make some easy money before that move comes to an end. And that is the point that it is likely the market will pause and reverse against you because that's what the insiders are trying to do. And when you look at it in these different time horizons, and it doesn't matter whether you're trading a 1, 2, 3 minute combination or a 15-minute 5, 1, or whatever it is, the key point is that you have the different time frames up, which give you a heads up as to what is going on in those different time horizons. They will all be different. For example, the hour there, you can see on the trend monitor, we're still flip-flopping around between bright red and dark red. So in that sense, we haven't actually made the full transition to a trend. It's gone bearish. It's now gone back into potentially reversing into a bullish trend, but we haven't actually gone into dark blue, and we certainly haven't gone back to bright blue again. So the question you've got to ask yourself all the time is, what am I seeing there? Am I seeing a primary trend which is reversing just into a secondary before it reverts back to the primary, or am I seeing a primary to primary reversal, in other words, bullish to bearish or bearish to bullish? And the same is true when you go right the way down to the 3-minute time horizon and the Renko end of the market. You're using the Renko there. What are you looking at there? Look at the VPOC. Look at the volume profile on the VPOC. That strong move through, that strong move through about 3 or 4 candles back. There was little volume there to suggest that the market was going to pause. So it's moved pretty swiftly through there. Now we've got some weakness coming in. What have we got? We've got a big candle there with a wick to the upside. Not a huge amount of volume on it, but certainly well above average under that candle. So as an intraday trader, what is your anticipation, your expectation as a volume trader? Your anticipation is that we are likely to see some weakness initially. Now, is that enough to reverse the whole market? Then you're back to looking at your other indicators, what's going on in terms of overbought, oversold, what's going on in terms of broad sentiment on the array, the matrix, different time horizons, etc., etc., etc. But purely based on that candle that's arrived at the top there, we're expecting a little bit of weakness. Now, what's interesting is as that market starts to fall, you're then looking at the volume associated with the move lower. And as we said yesterday when we were looking at the currency futures, it's all about volume and price, because markets require effort to move down in the same way that they do to move up. So when you are looking for a move lower, a strong move lower, you are looking for rising volume, because it takes effort to fall as the same it does to rise in a market move, strong market move. And looking over to the left-hand side, what are we seeing there? As Anna highlighted on the CSI, it's on 3 minute, but you'd be using this in exactly the same way. Multiple time frames apply to all the indicators, not just the charts. You'd have a multiple array of currency strength indicators, you'd have a multiple set of currency matrix, you'd have a multiple set of currency array as well. And yes, that does mean you've got to have different charts, several monitors. That is a fact of life. You can do it on one or two, but generally speaking, you do need more than that to actually look at all these options simultaneously. But as you can see there on the CSI, the euro very strongly overbought, the dollar equally very strongly oversold, just starting to rise, and that is why you're starting to see that reversal on the euro dollar fast time frame charts. Now, if you go right the way down to a slower time frame, what's actually happened? The answer is not a lot for the time being. The euro is still remaining bullish. The dollar is still remaining bearish, because you are on a very slow time frame. Anna's just isolated them out. Thanks, darling. That's great. And this is what you are confronted with the whole time. And it goes to, excuse the pun, but it goes to the whole issue of your time horizon, your time window. What is it you are trying to do? Are you looking at this as a much slower time horizon, in which case what you're seeing currently on the 3 minute or the 5 minute is nothing more than potentially a short-term reversal? Or are you trading this on an intraday basis as an out-and-out scalping trader, in which case you're going to be looking for that reversal, you're going to be trading that reversal, whereas the longer term guy over here on the hourly, or maybe even the 4 hour, is really not interested in what's going on the 3 minute or the 5 minute. Their focus is the hour, the 4 hour, perhaps even the daily. And this is what it comes down to the whole time. So it just reinforces this whole issue of using multiple time frames to help you make your trading decisions, because it's like a jigsaw puzzle. You've got all these little fragments of information, and you have to pick the pieces, create the picture, and it will help you to make your trading decisions, and also understand when you're looking at a different time frame why something has happened in your time frame by looking at a slower or faster time frame. Just starting to see that come off a little bit now, and as I said earlier, no great surprise given that that big candle with decent volume under it at the top there. So it's all about anticipation. It's all about volume price analysis. Is about giving you the confidence to forecast with some degree of confidence what is likely to happen next, the anticipation of what is likely to happen next. And then all the indicators help to reinforce that view, as you can see with the CSI very clearly there. It's helping to give you that confidence that, yeah, I am seeing this right now. And of course, if you were trading this as a trend trader to the upside, as a scalping trader, when the currencies get to that level, you may well have decided to close out. It gets the extremes. You think, I've had enough. That's it. I think it's going to pull back. Me done. I'm out. And then you see those signals in terms of VPA signals, and they really just reinforce that decision-making process. And we've got London in 8 minutes as well. And if you come along regularly, you'll know that London session crossover is a classic time. It's another of those great opportunities for the insiders and market makers to move the market rapidly in one direction, particularly for the European currencies at any rate, and then reverse it thereafter. So it's a great place for trap moves to develop, and you often see ahead of the session open, you'll see a market move quite strongly in one direction, and then almost as soon as the market's open, it reverses just as strongly. And it's just another case of entrapment. Yeah, sure. We're just going to switch over to NinjaTrader. Bear with us a moment. Should be coming up any minute on your screen. Just looking over Anna's shoulder. Yeah, that's fine. I'm still on the euro dollar here. I've got this on 5 minute. Just to go back to looking at the indices, I've got the three of them down here. I've got the yen index, the dollar index, and the euro index. And if we head down to the dollar index, and again, it just reinforces the point. What we have here is the dollar index on the bottom, and we've got the euro dollar on the top there. And as you can see there, it is a mirror image of the currency against the index. And again, it's just another heads up as to why is this particular pair that I'm trading, why has it paused, why has it reversed, why is it doing what it's doing. If we go to the euro index, just wait for that to load up on there we go. And obviously, because we're looking at the euro index now and we're looking at against the euro dollar, then the two are not inverse related, they are directly related in terms of correlation. So the two will mirror one another pretty much precisely. Just see what's going on in terms of the yen. As Garoda's been chatting away, hasn't he, I think? The yen's been relatively weak. We had this run up overnight, but it's starting to come off a little bit now, and that will be reflected obviously in the yen pairs. Just go to the currency array, which Anna highlighted on the MT5, exactly the same on NinjaTrader. I've got this isolated out on the dollar, and as you can see, whilst this is on a 5 minute time horizon, you can see here the euro dollar has been the strongest, but is starting to come off a little bit now on the ranking ladder. I think about 20 minutes or so ago, it was up at the top here. But you can see now it's starting to fall a little bit. Indeed, the dollar CAD on the, I think it was on the matrix, was down the bottom. And again, it was the same here on the array. It was down the bottom here, and it's now starting to lift simply because we're starting to see a little bit of dollar buying coming into the market. Just head over to the CSI. I've got this on 10 minute, so a slightly slower time frame. Let's maybe put that back to 5. There we go. So we're starting to see the euro roll over, and we've got the dollar starting to rise. We've got the yen starting to rise. So certainly from a trading perspective, if you're a scalping trader, you might be looking to short that now on a reversal. Certainly we've got the pounds selling off very strongly. In fact, might do. Let's just put the pound yen up for a moment. Let's change that over to the pound yen. One of the nice things about NinjaTrader is you just literally type the currency pair on top of the chart, and it switches across. Got some decent selling under that in terms of the pound under that particular candle. Back to the volume point of control. It's not been making very strong moves, but given Brexit, and again, it's another classic example. We've seen it many times since the vote, and certainly in the last few weeks. These very strong moves based on what is coming out of Europe, and the market then promptly reverses. And we've seen that not just on an intraday basis, we've seen that on a daily basis, a very strong move in one direction one day and an equally strong move the following day. That is a fact of life trading the British pound right now, and it's going to continue until all of this is sorted out and settles down, and then perhaps the volatility will start to drain away a little bit from it. That's not to say there isn't money to be made, there is. But you've got to be light on your feet when you're trading this particular pair, certainly the pound yen at any rate. Pound dollar is in a similar vein. It's very volatile for the same reasons. Let's just go to the, I can't remember what I've got on the Renko here. I've got euro dollar again. Let's go back to, this is the heat map. What I've done on the heat map is I've actually isolated out the euro. And this is a much slower perspective in terms of the currency pairs and their relationship to time, because what the currency heat map is doing is looking at a much slower time frame. You can see here we've got 1 minute right the way through to 1 month, and these pairs up at the top here are really there as a result of weakness from the commodity currencies of the New Zealand dollar and the Aussie dollar, which have been incredibly weak. So these pairs are very bullish at the moment, not so much through the prism of euro, much more through the prism of the commodity currencies. And the way this ranking ladder works is really on a weighting, because as you can appreciate, if a currency pair is bullish in a 1 minute time frame, then that is going to carry much less weight, for example, than if it's bullish in an hour or if it's bullish in a week. So this is a much slower paced look at the 28 pairs and their relationship over a longer term, because all of these timeframes are weighted, with the greater weighting to the slower timeframes, lesser weighting to the faster timeframes. And that's their rank. That's how they sit on the ladder. And if you're a slower time frame trader, you're looking at maybe the dailies, something like that. You will be looking at this as potential opportunities for longer term swing or trend trading, certainly reversals off the extremes. You can see how heavily the New Zealand has been beaten down here on spot 28, 27. We've got one at 24 as well. So New Zealand dollar and also the Aussie dollar, those two commodity currencies have really been under the cosh of late. But that could all change, and it really depends on the talk and the sentiment coming out of the central banks and their decision-making process and what they say at their various meetings. This is still falling. We're back down to the volume point of control. Let's just have a look at the CSI, see where we're going. Sorry, there we go. Still falling heavily, the British pound. We've got the yen starting to kick up. Pound is falling nicely. But bear in mind that in a few minutes, if not very shortly in a minute, we've got the London Open. So in fact, what I will do is let's just move that to the right place. There we go. Might just change this over to cable. And we'll just see the volume as it comes in at the London Open. A lot of volatility. This is what often happens. Still selling heavily. Let's move that down to, go to 3 minute maybe. There we go. Strong sell. And that's why you're seeing the strong move, because you've got the yen, which is starting to rise very strongly, and the pound is falling very strongly. And when you look at the currency strength indicator, it really does reveal almost everything you need to know. It's the radar on the market. It gives you that heads up as to where to go and look for a potential currency, and then thereafter a currency pair to trade, an opportunity in the various timeframes, whatever they may be. It tells you about the strength of momentum. If this line is very steep, as here, we know the pound is selling very strongly. We can't determine very clearly against which particular pairs would be the best to trade, other than what we're looking for is something that is rising strongly, like the yen. We've got a crossover, so we know for a fact, without even looking at the chart of the pound yen, that we will see a strong move on the pound yen on this very fast time frame. So it tells us that instantly. In order to find out what the pound is being sold most strongly against, it may be the yen or it may not. It may be something else. It could be against the Aussie dollar. The Aussie dollar, for example, might be a better pair to trade, because the Aussie is starting to kick up and rise quite strongly. It has been flip-flopping around in here, whereas the yen is coming up from a pretty heavily oversold region. Nevertheless, the Aussie would certainly be another one. Maybe the New Zealand dollar, this grey line, is kicking up, and probably even the Canadian here, this purple line. So from thereafter, it's really a question of trying to highlight which particular pair is going to give you the best opportunities. What is the market sentiment for that pair? And am I making the best choice? And then you're looking at the multiple timeframes and all the other indicators and VPA to help you in gauging whether that opportunity is worth the risk that you're prepared to put on the table to take as a position in the market. Just have a quick look at the currency array. Let's just isolate out the pound. And it's quite interesting. This is on 5 minutes. The most heavily bearish is the pound New Zealand. So we've got the strongest selling is actually against the New Zealand dollar down here. And the pound yen is actually owning up here. And obviously what you want to see from a perfect hand, if you will, to use a card analogy, but if you want the perfect hand, then clearly what you want to see for a full house is if all the pound pairs are stacked down the bottom here with the pound as the primary and the euro pound up here as with the pound as the secondary currency, then that is telling you that sentiment for the pound is absolutely universal. And that's what you're looking for the whole time. And it also applies to the currency matrix. Just isolate that out. Got this on 5.2. As these march up and down, there we go. We're pretty much approaching on the 5-minute time horizon the almost perfect scenario where we're seeing the pound being sold almost universally against everything else. There are always going to be one or two gaps, but you can see, it's like bricks moving up and down. If this moves it down here, then it's really joining all the others. But it's just an instant visual on the sentiment for the British pound against the complex. And it's just a really nice example. And then what the currency array does is really gives you the sense of the strength of that momentum, the steepness of this angle. The steeper this angle down here, then the stronger that momentum is. And so you can see instantly where is the strongest move, where is the strength of momentum on that chart described most graphically for you. And it's just a great, great tool to help you understand where is the strongest selling and where is it slightly weaker and where are my best opportunities. I'm just going to pass back to Anna at that point.
While David was speaking, this is my as I said, this is the workspace similar to the Eurodollar for cable, and we can see the move actually underway at the moment. And in fact, it really is just a continuation of the sort of bearish sentiment that we've had for the British pound. It had this is Salzburg, wasn't it? This is the fall from the disaster that was then. We had a typical consolidation, then we had an attempt to rise, a lot of volume under that shooting star candle. You can see here the candles moving higher, the volume rising nicely, and you think great. Then you had a down candle with a lot of volume under that down candle with the first sign of weakness. You've got the wick to the top of the candle, and then really the candle that did for it, whereas you have very, very high volume and very deep wick to the top of the candle. I mean, just from very, VPA 101, that will tell you that that isn't going anywhere but down. You do have a little bit, obviously, of a drop off in the volume, but then this really just represents what's happening in the sessions. You've got to read volume in context to the session under consideration, because it's not only relative, but it is also contextual as well. And this is what we have here. We've got the Renko picking up. What the Renko also does, it picks up momentum. Momentum you always have a bit of an overrun on price, especially when it goes on one of these deep runs, and that's when you get volatility triggered. We've got the volatility candle, and inevitably price will retreat within the spread of that candle. Now what we need to see is it's had an effort to rise here. There's clearly volume underneath it. The important thing is what happens now to the subsequent candles, and we'll see if the British pound can come back, and also depend on what the dollar is doing, because what we're looking over here, let me just move that to 5 minutes. Click the wrong one. 5 minutes CSI. That's the sharp move lower in the British pound, but the dollar's kind of sort of run out of a bit of puff. That's sort of turning over as well. So I suspect that momentum is I know that momentum in that fall is much stronger in one of the commodity currencies. You've got the Canadian, you've got the Aussie, and you've got the New Zealand as well. Right, we're going to stop there because we've got other things. We've got a meeting that we've got to get to. We talk about volume price analysis clearly at these sessions. And if you've not come across this before and you really want to sort of learn a little bit about it, then just head over to Amazon. The books are there. This is the sort of the book that started it all. This covers all the markets. Forex for Beginners also has volume price analysis, and what we've also done is we have done books of examples to help accelerate the learning curve that you can have with VPA. This is the one to do with Forex, and then there's one specifically for stock trading. With regard to the indicators, find my little thing here very, very quickly. quantumtrading.com. You can buy an individual one, you can buy, we have little bundles of them, or you can buy the complete package. If you've never come across them before, we always suggest you certainly start with something like a currency strength indicator. There's a lot, there are others on the market, there are free ones, there are other companies producing them. We know ours, the one we have, because David and I developed it specifically to underpin our methodology as well. And with the indicators, you get a lifetime license, all upgrades are free, and you get there is a 7-day money back guarantee. If you don't like the indicators, it's 24/7 support. We work 365 days of the year. We cover all the markets. We have users literally all over the world, and you can transfer from platform to platform. The only difference is that the NinjaTrader platform is slightly more expensive. So if you start with MT4 and 5 and you want to go to Ninja, you do have to pay a little bit extra, because we've got some slightly different indicators, additional indicators as well. And as I said, all future indicators are added for free. And I mentioned earlier on, we're considering doing the one for the British pound. So if you've bought the package, that will automatically be added to your list of indicators. You don't ever have to pay us any more money. This is the program. This is where we are at this very moment. This is our monitor setups. The program is 1391 for MT4 and 5 and 1694 for NinjaTrader 7 or 8, but it does include the full suite of indicators, and it's about 50 hours of video podcasts. It is self-directed. David mentioned one of the PDF downloads. There are 13 in total, and it's really, you take it at your own pace. You can always email us. We will be going back. We've got some, we're scheduling some webinars in the next sort of few weeks or so, David, for the program users. And we have a little sort of support group called Trader Chatter. And if you want any more information on anything you've heard or you've seen today, you're more than welcome to email me at anna@annacooling.com. I've got helpdesk at quantumtrading.com, but actually you can just email David at quantumtrading.com. So we have to run. Thank you so much for coming today. It's been lovely having you. As I said, if you've got any questions, just shoot us an email and we'll be more than happy to answer any queries or questions that you may have. Have a great trading day. Don't forget FOMC tomorrow. There'll be lots of trading opportunities, and whatever you are trading, just stay safe. Take care. Bye.